Question 29. Requirement A. Assume that Ruger is a foreign subsidiary of a U.S. multinational company that used the U.S. dollar as its reporting currency. Assume also that the dinar is the subsidiary's foreign currency. What is the translation adjustment for this subsidiary for the year 2017? So, similar to prior question, we can solve this problem with these schedules, the schedule like here, because here we'll assume that foreign currency is the functional currency, which means that we are going to use the current rate method to solve this question. And if we use current rate method, which means that the subsidiary company's net asset are exposed to the exchange rate risk. So here, net asset equals to total assets minus total liabilities. So total assets here include cash, accounts receivable, and land. And the account liabilities include the note payable. So we use total assets minus total liabilities, we get 150,000 dinars. This is like the beginning balance of net asset on January 1st of 2017. That's beginning balance. And we can translate those net assets from foreign currency to US dollars based on the January 1st exchange rate, which is 0.36. Alright, so let's move on to see whether there's any transaction happened during 2017. So the first transaction is that on May the 1st, the foreign currency renders service to a customer for 127 dinar. So journal entry here is to debit accounts receivable and credit sales. So that's going to increase the company's accounts receivable by 120,000. Don't worry about the sales, and we're going to translate that to US dollars. That will equals to $44,400. That's the amount of change in the of net assets. And then on June 1st, Ruger incurred 100,000 operating expense. The journal entry could be with debit expense or credit cash, either cash or accounts payable. But both of them, either of them is going to decrease our, assume this is accounts payable, decrease our net assets by 100,000 dinars, and transfer that to US dollars. That equal to 39,000 US dollars, based on the June 1st exchange rate of 0.39. Okay, so we only have two transactions. So next we can get ending balance in both foreign currency and US dollars. So in foreign currency it's going to be 170,000. Well, if the company translate everything on US dollars the same day when that transaction happened, it's going to be $59,400. In other words, this $59,400 is what's recorded on the book, but this $69,700 based on the net asset in the foreign currencies times the ending year-end exchange rate. This is what the net asset should be. In other words, we need to make adjustment from the recorded amount to the should be amount. That's going to increase the net asset by 10,300, and this is going to be a kind of a credit to the company's book. Alright, so then let's move on to requirement B. Requirement B is now we'll assume that US dollar is a subsidiary's functional currency. If that's the case, then it means that the company need to use temper method. And if the company use temper method, then instead of net asset, the net monetary position are the items that exposed to foreign exchange rate risk. And then the net monetary position at the beginning of 2017 is negative 50,000 dinar. And the reason is that the land is no longer included as the net monetary position. We only have cash and receivables here. So we have cash and receivables and then minus notes payable. So at the beginning of that year, the net monetary position is negative 50,000. In terms of US dollars, it's negative 18,000. And first transaction is about the accounts about sales. So we increase accounts receivable. That's going to increase net monetary position as well. And on June 1st is the incurred operating expense. That's going to increase our accounts payables. So that's going to decrease our net monetary position. And that's going to be a negative 100,000. Alright, okay, so then the ending balance for the net monetary position will be 30,000 dinar. And the transfer that to US dollars will be $12,300 based on the 2017 year-end exchange rate of 41 cents per dinar. However, if we record everything in US dollars already, then the recorded amount is negative 12,600. And if we use the should be amount minus the recorded amount, we have a positive $300. And that will be a gain. Okay, so the last question is, assume that Lugar is a foreign subsidiary of US multinational company on December 31st, 2017 balance sheet. What is the translated value of the land amount? And on that same date balance sheet, what is the remeasured value of the land account? Okay, so if we talk about the translated value of the land, which means that we are using current rate method. And then if we are using current rate method, then we need to translate the land value from the foreign currency to US dollars based on current rate. The current rate is 41 cents per dinar. And then the balance, the translated value of land will be 82,000 US dollars. So this is US dollar. And then how about remeasured value of land, which means that we are going to use temporal method. So if we are using temporal method, then we are going to translate the land value based on its historical rate. So historical rate is the rate of the day when the company purchased the land. So let's have a look at the transaction about the land. The land was acquired on April the 1st of 2016. So we know that on that date, the exchange rate is 0.33, and then which means that we're going to use 0.333 times the current times its foreign currency value 200,000. It gives us 66,000 US dollars. That is temporal method of remeasured value of land.